Welcome back to Advice Amplified. Today's guest is Martin Jennings.
Reading about SJP in the press and why is that? That's because actually decisions were taken in the interest of SJP, not in the interest of clients.
In this episode, we're going to go really deep into platforms, looking at trust, service levels, and fundamentally how do advisors evaluate what they need from a platform.
Every customer I talk to, they say, Martin, we'd love you to make money, just not very much. Yeah.
Martin is the CEO at Parmenion and has over 20 years experience working across the globe.
Is it my shareholders? Is it my customers? Or is it my employees? You can't charge your clients less and do more, pay your employees more, and deliver your shareholder returns.
I know you're going to love this episode. It was a really awesome conversation. If you could do us a huge favor by subscribing to the podcast, maybe even give it a share, that would really help us to get more amazing guests like Martin. Thank you. Martin, welcome to Advice Amplified.
Brilliant. It's great to be here, Pete. Thanks for inviting me. Looking forward to talking about all things platforms.
So I ended up asking Matt this question, platforms just seem like they should be simple. Put some money in, it gets invested.
Yeah.
But there's always billions of pounds floating around. It's a lot of people. Seems really hard.
Is it moving the assets, or are you talking about into building the systems?
Yeah, the whole idea of a platform.
The FCA kind of keep us in work, right? They keep coming up with hundreds of pages of rules every year.
Yeah.
Of how pensions are going to change, how investments are going to change, how tax is going to change, etc. So if you think about that, we're constantly, people that run platforms are kind of, we're analysts, we're technicians, we're kind of guys that just sort of sit there and interpret rules and try and build systems to try and simplify that for the users. But they're quite, they're complicated beasts. But I think maybe if they stopped tinkering with regulation, we wouldn't have anything to do. The advisor community is pretty disparate in the UK. There's thousands of firms. They all want something different. So you take those thousands of requirements in and try and build common systems, try and build common infrastructure. So you've got an ever-changing rule book. You've got thousands of users that all want something slightly different to allow them to kind of build a kind of unique proposition for themselves. And you just kind of sit there in the middle trying to make judgment calls on these things. Whilst at the same day, that platform's really simple, right? At the end of the day, it's just a custody function.
Yeah.
So all we have to do is add up every day, how many shares do we have, how many units of funds do we have, and how much cash do we have? And does that reconcile? Ultimately, we do a check to the fund managers and we do a check to the system, and that's pretty much what a platform is. But then you start getting thousands of transactions running through, and people outside of your sphere of influence do different things. Maybe they do something a bit late. That creates a break that then needs to be checked. So I think there's different bits to it. At the pure nuts and bolts of it, we're just providing a custody and admin function.
Yeah.
But clearly we want to make ourselves more relevant to more people. So we get into a feature function war. Now, Parmenion doesn't really play that game because we have our own proprietary tech. We're pretty clear on what our proposition is. We're there to run portfolios. We're there to run models. We're there to run centralized investment propositions. So we're not trying to compete on all fronts. But I think for the sort of open market, pure wrap platform, I think it's hard, right? They're competing on so many fronts for so many bits of business that ultimately it's quite a complicated business at the end of the day. Changing rules, thousands of requirements. And I think that's probably kind of why it's harder than it should be. Because at the end of it, it's just a big registry system.
And it seems like there's, maybe this is driven by regulation or the obsession with cost, and it's all about stripping cost, and it's like a race to the bottom. Should that be the end game? Should it all be about bips and whatever a bip is, or is there a point at which you go so low that actually you've gone past the, because I think about EasyJet, and this totally isn't it, but the whole new frills thing gets to the point where you don't even have a seat anymore, and there's no toilets on the plane, and you're like, okay, it becomes a terrible experience, and I'd rather pay a bit more.
EasyJet versus Ryanair.
Yeah.
I actually think EasyJet's okay, personally. I think Ryanair's appalling. But I don't know why I say that, just maybe the ones that I'm always delayed on. But it's the bits you don't see behind that, right? Because let's take that analogy. EasyJet, how often is a long-haul flight, a premium long-haul flight, how often is that delayed? Fairly, not very often. Short haul, cheap budget, delayed quite often. So why is that? I think they've got the premium routes. The infrastructure that sits behind is on a different scale. They've got the preferential routes. They've got the slots on the runways. They take off on time. They land on time. And so there's an infrastructure there that needs to be paid for. So, if you want to cut costs, you can't provide the full range of services. And I think that's the same with platforms. As you scale, there should be efficiencies. As more things become automated, there should be efficiencies. And those benefits should be passed on to the end clients. And that logically makes sense. However, this obsession with race to the bottom is slightly different. What I see is entrants coming into the market without a USP, ultimately. So their only play is price. So they're trying to effectively land grab. So they offer a low price to effectively grab clients' assets, whatever their kind of market share is judged by. Who is that helping in the long run? Because those clients potentially are kind of honey trapped into these low cost, hopefully, winners of the future, but they might not be. They can't all be winners of the future. So if I was putting my pension assets with somebody, I'd want that provider to be around for 10, 20, 30, 40 years time. So for me, you want your providers to make money. You don't want them to make too much money. Ultimately, every customer I talk to, they say, Martin, we'd love you to make money, just not very much. Yeah. We need you to be, so self-sustaining. We need you to be around. We need you to, as we talked about earlier, we talked about all those FCA rules that come around. We need someone to analyze them. We need someone to build new systems for them. We need you to respond when things go wrong. It's like your builder in your house, right? When everything's going well, you don't see him. You judge him by when something goes wrong and how everyone leans in to fix it. And I think that's the same in our industry. So come back to the point around race to the bottom. I think that's the only lever some people have got, but I think that's not helpful. Capital is only going one way. The amount of capital you have to hold. The cost of change is constant. And you want to be ultimately kind of, around in 40 years time. So you need to be making a profit. People, shareholders can't sustain those losses for a long time. And I always call it the CEO's dilemma. The CEO's dilemma is you're sat there on a daily basis, trying to work out, which of my kind of, 3 favorite children am I going to keep happy today, right? Is it my shareholders? Is it my customers? Or is it my employees? Because ultimately, you can't charge your clients less and do more, pay your employees more, and deliver your shareholder returns, right? So you're always kind of making a constant battle. So it's the CEO's dilemma. You can look at every business challenge through those 3 lenses.
And I guess without, what's the right way of phrasing this? Like, cost is the lazy, easy dimension to evaluate value, isn't it? If it's the platform's cheap or this product is cheap, like how do we put something else on the table, I suppose, for advisors? Yeah,
how do you judge it? How do you judge cost versus value? Yeah. Why are you happy to pay £800 for an iPhone? Yeah. Most people I know don't even actually answer their phone anymore. So kind of, what are they actually, and what are they doing? Cost versus value is a really interesting, but what are you ultimately providing from the platform? You're actually, you're providing a service. At the end of the day, it is a service. You are here, you're giving us your money. We are looking after it. We are then applying those instructions, and whenever you tell us to, and we'll kind of keep on track of all of that. So for me, that service is there. So the question then is, how do you evaluate that service? At its purest, you can go and buy institutional custody somewhere in the market for pretty low single-digit basis points, right? If that's what you want. If you just want pure custody, I don't want anything else, no bells, whistles, no reporting, no tax wrappers played in, you can get that. Then you start layering it up. And then how do you value it? How do you evaluate the value when something goes wrong and somebody leans in and fixes it? Because in an ideal world, the best service is probably no service. It's all electronic. Everything works. I never have to contact the provider. And if there is a question, I should be able to find it really easily online. Come back to our iPhone analogy of earlier, it doesn't come with a user manual anymore. So should the platform not have a user manual? Should we not train people? Now, I think that's probably not reality because we're dealing with some complex rules, when people start getting into, into retirement and taking income, and they've got multiple sources of kind of investments, and how you manage all of that. So how do you value that? And I think at the moment, as a sector, we've got ourselves caught up with value equals price, but there's no way to evaluate the service that you're getting. And ultimately, that's what we're providing. We've done some research recently with some friends at the Landcat, kind of tried to look at kind of service, but that's just really measuring kind of how do people value service? How do they, an overall feeling, oh, I get poor service. But there's no way to actually objectively measure it. And I think that's what we're going to try and do next, try and find a way to objectively measure that. So you can start to kind of choose what's important to you. And because service isn't one thing. It's many, many, many different things. And I think we get lost on that. So the research, the FCA research on their own would suggest that kind of, people don't value rating agencies. They're not sure what they're getting from the rating agencies. They're all there as valuable, but everyone's got 5 stars. Everyone's got diamond ratings. Everyone's got kind of this. And, you only really know when something goes wrong, and, you have to lean in and help fix that.
We see this with Ningi. I see all the awards that you can win, and it's, a case of, well, we need to buy a table at that event, or, buy this or buy that report, and then we'll get, so, hey, cool, we're not going to play in that space. But then I can't help but sort of wanting something for the website. And is there...
You need a sticker.
Yeah, you want the sticker.
Give me my service sticker. Yeah, I think for you, you're in a great position, right? Because you're in a part of the market that I think is probably the fastest kind of growing part of the market, right? That whole advice software, practice management, there's not been a huge amount of innovation in that space for the last, 20 years. I mean, when I first started, it was always first software kind of going, and now in Teleflow, they've kind of come up and take the most market share. But I don't think there's been an awful lot of innovation. It's just been a lot of talk about nobody shares data and it's all very difficult. Well, now we all share data, right?
Yeah.
So data's not the problem. I actually think, and we've got enough technology, but are we actually spending enough time kind of actually thinking and understanding what the actual problems are? And I know you and your business, you're kind of coming at this going, right, tell us what the problem is and we'll help try and fix it. And that's kind of where we were with platforms 20 years ago. So I think you're in a really kind of interesting spot, but how do I judge it? Is Pete any good? Is Ningi any good?
Yeah.
And I suppose until I've installed it in our business, how do I actually know? And that's the same with platforms. Everyone will say they give good service. We go out there and our sales guys will be knocking on the doors. Oh, we're good at service. We answer the phones. But the BDM from the next firm saying the same thing. The BDM from the next firm saying the same thing. You never know until you actually try. But then secondly, what's important to you might be very different than the firm next door. The simplest, purest example of this is, when I phone you, does somebody answer the phone or do I wait for an hour? And we all know that there are people out there where you have to wait for an hour to kind of get through. Dead time, wasted cost. In a time when markets are down and fees are hard and cost of living crises, volatility, trying to get people to invest is difficult. Cash rates, it's probably easier just to put it in a term deposit. Do you really want to be then wasting your precious time sitting on the phone for an hour? No, of course you don't. But then you get 2 different providers. Both answer the phone immediately. Hello, provider A. Hello, provider B. Provider A says, thanks very much, noted, we'll get back to you, puts the phone down. You phone provider A again in a week's time. Hello, noted, yep, got you on file, our SLA is 2 weeks, down. Provider B answers the phone and says, hang on a minute, a bit more information. This is going to take us 5 or 10 minutes. Let me just go and get the person that's needed. And this solves your problem there and then. So you get your one and done rate, right? If you measure the world on how quickly you answer the phone, provider B is providing a demonstrably better service for me than provider A. And actually, from the provider side, which is our side of the fence, we think doing B is cheaper in the long run. Why have someone answer the phone 10 times and just fob somebody off? Ultimately, you just want to fix the problem and move on. Build trust, reliability, credibility, intimacy. I think that's the trust equation, isn't it? All kind of divided by self-orientation. So when provider A, self-orientates around, we want to make some profit, we want, that's where that whole trust equation kind of falls over. So, it's an interesting one, because I think we talk about service as if it's a feature or a function, and it's not. It's many things, and it's different things to different people.
It almost feels, to me at least, that there's like a irreducible amount of complexity and stuff to do in that kind of world. And if you remove kind of cost or service from one place, it's got to go into another place. Yep. So either the platform picks it up or the advisor's on the hook chasing it.
Yep.
I
completely agree. And look, I don't know if we've seen that out, because at the end of the day, the number of, from a client seeing an advisor, the number of things that have to happen before, said client buys product, it is kind of standard, right? You can't change it. You can automate stuff. You can simplify it. You can change who does it. But ultimately, there's a number of tasks to be done. Then when somebody wants to take benefits, it's the same, or somebody wants to make a change, it's the same. So we're in a space at the moment, I think, where people are coming to the market and saying, we can do this better. We can do this better. We've got better widgets. We got better technology. We got better, I don't know, whatever. Everything's better. It's just shiny because it's all new and it's shiny. Well, what they're doing is saying, well, actually, we're ripping up the rule book and we're going to kind of split these tasks up. But actually what they're actually saying is, we're going to push some of these tasks back to you. You currently today, you phone platforms, you deal with platforms every day of the week. It takes you time, yeah? Rather than chase the platforms, don't worry about that. Become your own platform, ultimately. And then you don't have to chase them. You just got to deal with client services. Well, unfortunately, someone still has to chase, for example, on transfers. There are a lot of people out there that still don't kind of, that transfers aren't all managed electronically across the market still. They should be. The technology's there. But if you're dealing with a, heritage type kind of scheme administrator, they may not be enabled. So someone's got to contact them, And so what you're doing is you're pushing the administration about. You're not actually removing it. You're just moving it around in the ecosystem. And I get it from a commercial decision, because ultimately, if you can run the tech only, that's infinitely scalable. The problem is when you have to get a human involved, that's not so scalable. So it's sort of variable cost, fixed cost, type of elements, right? So, we'd all want it to be simple. We'd all want it to be kind of provided through technology. We'd all want it to be infinitely scalable, because then we could reduce our prices, still make our margins, still make the CEO's dilemma. We could make everybody happy, pay our staff more, keep our customers happy, give our shareholders a return, and reduce the overall cost to clients. But unfortunately, the market doesn't quite operate like that at the moment, unfortunately.
So I feel like that'd be really interesting to dig into, because you mentioned transfers, and I always, and again, referencing Ningy, we get asked all the time, can you bring in new money really, really slick? Let's do client onboarding. Let's do top ups. Let's do all this kind of stuff. Yep. Transfers, withdrawals, like anything like that. That's just, I don't really need to work. How can it be that it can take 6 weeks or 6 months or be really, really painful? How do you think the industry gets away with that?
How do we get it? I don't think anyone's trying to get away with it.
that's a loaded way of saying it.
Ultimately, I don't think anyone's trying to get away with it. I think that there is, look, the regulation has kind of been pretty clear.
Yeah.
Making transfers simpler. Right? Let's have some pivot share classes. Let's make sure that, the funds on platform A and the funds on platform B, if they don't match, we'll have a pivot and it'll all go through. And I thought that was going to drive up in specie transfers. And I thought that would actually ultimately make things a bit simpler. What we see is probably it hasn't made an impact at all. I think less than 5% of our transfers are in specie. I'd go and check on that stat, but I think it's a pretty low number. Because what happens is, things aren't fully automated. Assets get lost between provider A and provider B. And when the client looks on their dashboard and looks on their portal, they're kind of, where are they? Where are the assets? They're in the ether somewhere, right? Now, there's enough technology. And so it should just be really simple. We should just be able to key in a policy number, push go, and the assets should all just move across electronically. Well, I think people clearly are investing more money in processes than money out processes. That's a commercial decision. So if you believe that helps you build trust with your clients, then so be it. I think some people are ultimately kind of making kind of policy or kind of commercial decisions, maybe to promote in money versus out money. And in some cases, people just aren't adopting technology where they should. I still struggle to comprehend how somebody can do electronic transfers in, but don't do electronic transfers out. And there are providers out there that have made that choice, right? These pipes go both ways, right? I'm sure if we got the guys from Alters and Origo here kind of thing, they'd say their pipes go both ways, right? And so that must be a conscious decision. And I think that's a real difficult one for advisors to kind of comprehend and understand. And why should they? This is complicated stuff below the, it's a big iceberg. You see the top of it. I key it into the screen and click. That should all just work. I mean, I can download an app on my phone in 2 seconds. I can open a spread betting account like that, take money and make a bet and get the money paid back to me in no time at all. Yeah. I can go on to Monzo, Revolut. I can do it all today, but why is it so complicated? So I can only assume that, people are worried about kind of losing asset. People are concerned that their models don't stack up. And, I think that's individual kind of choices that businesses, but this is why I come back to the due diligence point we mentioned earlier and servicing. What are the things that are important to you? If getting money on platform quickly and having a shiny front end and doing the servicing yourself, you should be able to tick all those things in a comparison due diligence. But you get what you pay for. I mean, we know that a third of people in the last 12 months have left a platform because of poor service. But when they choose a new platform, they choose it on price and features. So you get what you buy in that sense. But I think that's too simplistic because I don't think that people can actually objectively assess those components. So I think ultimately, as I said earlier, we need to give them ways to do that and allow them to select the things that they do. So due diligence has to go deeper. I mean, it has to look into all kinds of things, cybersecurity, investment in technology. But you should start thinking in your due diligence about what happens when I want to get off. Do you allow that? Is that straightforward? Do you charge me for that? Do you do it electronically? What's your transfers out? Perversely, I'm proud at Parmenion that our transfer off times are quicker than our transfer in times. Now, I could be back to my CEO's dilemma. That I could be, shareholders might not like that. Keep hold of the assets, but we think that builds trust, reliability, credibility, intimacy. We take our own self-orientation out of it, which is the denominator, and we believe that will build more trust. We give exceptional service. And over time, we will kind of really kind of build partnerships with the advisors that use us.
Do you think there is a trust issue? We often get told, I read stuff in the press or the regulator kind of comes and drops the trust issue.
Yeah.
I wonder, do we deserve to be trusted? And
yeah, I think this is it's a fascinating kind of topic because the FCA or the FSCS, they've all done research. Where does, financial services, it sits between telecoms and utilities or broadband providers and utilities for trust, right? So we're not trusted as an industry. However, I've never spoken to anybody, friends, colleagues, people in the industry, who would not say that their advisor, the guy that sits in front of them and they have their utmost trust. They're sitting there, they're doing your plans, but they're sitting there trying to understand you, your partner, understand where you're going, understand. So you tell them things that you probably don't tell many people. So you have got the most intimate trust with that financial advisor, yet the industry is mistrusted, right? So how can that be? It makes no logical sense. I think people deal with people, not with brands. So I think two things happen. And let's take that trust equation again. Reliability, credibility, intimacy. Be open, be honest, do what you say you're going to do it over and over again. Yeah. And then it's kind of the denominator is self-orientation. So, ultimately self-interest. So what happens I see so often is once you kind of self-interest, structured product selling scandals, British Steel cases, the self-orientation denominator became so large that actually trust is broken down. People read those things in the papers, the people read them, they see it on the news. And so you look at that industry and you say that's just not trustworthy. But, Fred that turns up in my house, I trust him with my innermost secrets. And so it's a very interesting dilemma. So then you start to say, well, how does that play through in the industry? Well, two things. Why is service so important? Because you want reliability. You want the same thing to happen over and over again. It's like going to your favorite restaurant. This is the way I think of it. So how many times you go to your favorite restaurant and you go there, every couple of months? And when you go in, you kind of want the menu to kind of be pretty similar to what you had before, and you want it to be the same quality, right? For the people working in the restaurant, serving the same food every day, the same menu, must get quite boring after a while. Must get a bit lax. Oh, just, just 90 seconds under the grill, not 2 minutes. No, because to be at that top end of service, it needs to be the same every single time. So reliability. And I think as providers and all the issues we've discussed today, they're not providing that level of reliability. So that helps undermine trust. So that denominator of self-interest plus that reliability, I think creates a kind of aura around the sector that sort of says, things go wrong, a bit of self-orientation came in there. Whereas actually, for me, it's a kind of, the advisor is utmost trusted. So how do we get around that kind of structural challenge, and once you start getting consolidation, you become big brands, reading about SJP in the press and why is that? That's because actually decisions were taken in the interest of SJP, not in the interest of clients. So if we stay client focused, I think that trust level will come back.
It's a really interesting duality that social media influencers or finfluencers, or you see reports of ChatGPT being used for financial advice. So people are willing to trust demonstrably non-trustworthy sources for financial advice. Yeah. But the industry that's heavily regulated, professionalized, all these kind of things. I suppose it's a case
bad
of
actors like ruining it for the masses.
Yeah,
I think in that sense, and where do you get your sources of information from? And we're different. On the other side in the States, people are kind of a bit more financially. You get your first stock when you're 18. You're more open. You talk about wealth at parties and with your friends. British, we don't talk about wealth. We kind of keep it to ourselves. So where's our trusted source? Google, really? Is that where we should be going for some complex advice? So I think the financial advisory profession has got nothing. But they are. They're in a really good spot, right? Because there are more people that need advice. We know that there are 6 million people that would pay for advice or whatever it is that don't get it. So the profession's really healthy. There's a lot of supply of clients, right? So the question is, how do you kind of get over that? How do you kind of industrialize? How do you close that gap down? I don't have the answers to those challenges, really. I mean, it's a very complicated kind of world.
Yeah. I was going to ask you that. The 6.5 million, how do we solve that?
I don't know. I think we can all do our bit. I think from our side, the providers like us, technology helps, right? If we can make it more efficient and effective, again, credible, reliability. You're hearing a lot from reliability, service, self-orientation. But for me, if we get that reliability going and we can actually automate as much as we possibly can, if everybody kind of all of a sudden tomorrow could wave a magic wand and every transfer was electronic, that would free up capacity, right? That would free up capacity in the advisor's office as well. And the research that we've done recently would suggest that sort of 90% of people would spend time building their business, finding new clients, running their businesses better, etc. So, if you take that, that an average advisor is dealing with 120 clients, if they could deal with 200 clients, all of a sudden you've closed the gap a little bit. I think there's some regulation we need to do around guidance and advice and, the perimeter guidance side of things, but that will kind of open up kind of different channels. But I think it's little bits. There's not one silver bullet that's going to change that. On our side, all we can do is try and simplify it as much as we can, and just fight the fight really for just getting rid of nonsense. I mean, at the end of the day, it's just nonsense.
Yeah.
Some of this stuff is just, you're dealing with it every day, right? I mean, from your business is existing to go in and say, tell us your nonsense and we'll take the pain away. Yeah. And I think we're trying to be a bit like that. We're in control of our own destiny. So we're just saying, let us help you remove the nonsense. Yeah. But, nonsense for one person is kind of somebody else's kind of business model. But I think we're kind of aligned on that, right? That's what you're doing. I think that's what we're doing. Owning our own technology really helps because we can focus on the things, the problems that our clients have. I'm not trying to compete with everybody else's features, This happens in many other sectors, telecom sectors. You get into these feature function wars about, we've got one of these. Have you got one of these? Have you got a push 5, push star, and it does, it plays jingle bells? No, we haven't. Oh, I can't use you. I mean, does anybody ever use this stuff? It's just used to get the BDM out of the office, right? So the sales guy turns up and you say, have you got one of these? No. Okay, good. I don't actually have to have the difficult conversation, which is I don't want to use you. So we're not playing that game, right? We're just trying to say, tell us what you want. And we'll try and build cool solutions that just work every time.
I mean, that resonates so hard. We literally got asked the other day, how would someone configure a workflow to send someone an email on their birthday? And I thought that's not the question you need to be asking us right now when you're running your business on Excel. So you're not predicting that someone's going to drop some crazy AI or blockchain or some nut solution in there. It's incremental, sensible moves forward.
Yeah, I think so. I mean, blockchain, it seems to have gone away now. So that's kind of, I think and I try to understand these things, not being very bright. I kind of, I have to kind of consider these things. I kind of get blockchain in some sort of closed loop kind of wholesale environments on a retail side. I don't understand how that, everyone's signing off on that token kind of works. I kind of, anyway, let's put that to one side. AI is an interesting one. AI is everywhere at the moment, isn't it? I think machine learning it means more to me than AI. And so from a machine learning perspective, I think there are definitely significant applications. I mean, just repeatable processes, things that a machine can do, doesn't make the mistake, right? That we can kind of just run and run again. Coming back to my reliability point, let's use machines to do what machines are good for. That frees up the people to do what they're good with. People are good at building relationships. People still like dealing with people. I think the whole AI world and financial advice and kind of automated, it scares me. Generally, maybe because I'm just old now, so it's kind of it just scares me, the thought of kind of talking to nobody. And Elon Musk tells everyone that we should be more scared of AI than we should be of anything else, right? And he's a smart guy, right?
Yeah.
Smarter than me, so I take that on. But look, in our own business, I think AI's got an application, particularly in generating content, promoting our products. Taking a kind of an analyst briefing or one of our fund managers briefings and being able to convert that into, tangible content, web content, visual content, that simplifies that whole production piece. But I think on the platform side at the moment, for me, that's a lot of machine learning. And how can we take unstructured data sets and turn them into structured data sets? How can we run repeatable processes and not make, but going back to the point about transfers, if people make a policy decision not to automate that stuff, what's your AI going to do to solve that problem? That, the end point is a fax machine.
Yeah. Just call that fax machine over and AI spam.
For anyone that's worked in offices for years ago, you'd have known that when the thing used to run out of paper, and it just kept getting called and called and called again, kind of thing. But that's how we're looking at that. I think again, we can be innovative. We can try things, and I think there are a lot of applications. They're probably not where people kind of immediately think they are.
And I suppose, especially when you put that context of this is someone's life savings that's going to sit there for 30-40 years. Let's not throw some Terminator style stuff at it too quickly.
Yeah, at the end of the day, look, I mean, money, particularly, most of our clients, we're dealing with kind of mass affluent clients, mums and dads investors, and they've earned that money, right? It's hard. They just want to know and trust us to look after it. Yeah. Make sure you kind of don't, just don't cock up, really. And it is doing, we always used to say, do the basics brilliantly kind of thing. I think it's probably slightly different now. We just want to just do the basics boringly, right? Just do them and do, like my restaurant analogy earlier. When I go, I just want my steak to be cooked like that. I want my mac and cheese to taste just like that. That was the best. When I come in 4 weeks' time, I want my steak to be cooked like that. My mac and cheese. I don't care it's the 1,000th steak you've cooked today. I want you to put the same love and attention into my steak that you put into the one you cooked for me 1,000 steaks ago.
You're in a privileged position, I suppose, of looking across a lot of advice businesses and seeing what they're doing well, what they're not doing well, and those kind of things. What nuggets of advice might you be able to offer for advisors that could be listening right now and wondering what they can do to make their practice more efficient or more engaging or just better generally?
Yeah, God, that's a good question. You know, never thought of me giving people advice on how to run their business. I kind of get enough people kind of telling me kind of what we should be doing. I try and run our own businesses as well as we can. For me, the people you work with, the ecosystem of providers or technology or software that you use, let's just make sure that they actually do what they say they're going to do. Do the basics boringly, but think about it in terms of kind of, I think due diligence now is kind of, there's so much on offer that it's so easy to get swept up with that's new or that's shiny, and the old magpie kind of analogy. When at the end of the day, this is just boring custody and registry, right? So ask the questions. Ask the questions about, does it interface with this? You know, do I believe you? Actually, you know, ultimately, what's it like if something goes wrong? Can I get out? How simple do you make it to get out? I mean, it sounds a negative. It's like doing contracts. It's like providing any kind of contract with anybody. Contracts are irrelevant. When you do a commercial negotiation with someone, you sit in a room for hours. You pay lawyers far too much money, yeah, and you let lawyers talk to lawyers, and they all just kind of create this world for themselves where they can all earn fees, and then you create these lovely contracts, right? And then you never look at them ever again until they go wrong. Then you pull them out and you realize that it didn't cover the scenario. But I think that's the same with due diligence, right? You're only really looking at things. Everyone can take new money in. Everybody can sign. Everyone's got an app. Everybody does this. Everybody does that, you know. So what happens when something goes wrong? So I think that question for me would be, make sure you do your due diligence. Make sure that things kind of talk to each other. Think about your client. Think about the services you're providing them. And then think about, do the people that are providing me services live to the same values that I would expect when I deliver that to my end client? And I think that's a good way to kind of live by. Work with fun people. It's a relationship business at the end of the day. Work with fun people, do your due diligence, make sure they got the same kind of values and beliefs that you do.
I mean, could it be as simple as making it easy for people to leave? Solves a lot of these problems. So I think about banking, and when I joined the industry, 15 years ago, there was a stat that you were more likely to get divorced than switch your bank. I think that's changed now. I'm not sure.
I don't know. Maybe
the switch.
Well, you've
guarantee.
Got that switch guarantee, now, haven't you? So moving a current, I haven't done it for a long time. I bank with HSBC, so I kind of, maybe they're not the best bank, but when I moved to Australia, they were the only people that would set up a bank account in Australia before I was living in Australia. So they understood my problem. You hear it in the office, people moving banks all the time. And it's easy. All the direct debits get moved, all the standing orders get moved, everything kind of works. Why isn't that the same in financial services? Now, I think maybe legislation drove that.
Yeah.
Was it legislation that drove that? I don't think we need more regulation or legislation. We just need to enforce the rules that we've got. They're all there. Consumer duty is massive, right? And it's so big, and it now becomes the buzzword bingo. Or is that very consumer duty of you? And kind of, but ultimately, at the end of the day, it's just saying, just do the right things.
Yeah.
So going back to my point, I'll take money in electronically, but I won't send it out electronically. Is that doing the right thing? And those sorts of things, I think, are really easy to kind of regulate, to be perfectly honest. So I just think we just need to see some of that action, really, rather than just more words.
Totally. Well, Martin, that's been absolutely amazing. Thanks so much for...
Thanks for your time, Pete. Time's flown. Brilliant. Good to see you.
And you.